to today's webinar hosted by Left Brain Professionals. I'm Steve Bressler, and I'll be your host and moderator today. If you need any help at any time, you can email us at support@leftbrainpro.com or use the chat function within the Flow platform. Let's go over a few housekeeping items. Today's webinar is hosted on the Flow platform. You should see a small toolbar with 4 icons in the upper right-hand corner of your browser window. The first button will allow you to unmute yourself during the Q&A. And note, we must allow the audience interaction from our side for the mute button to work. The second button will put the webinar in full screen mode. The third button enables the chat and Q&A. And the fourth button enables the settings. Okay, please enter your content questions in the Q&A panel at any time during the presentation. We'll address as many questions as we can and use the chat features to chat with the host, presenters, and other attendees. Please do not enter your content questions in the chat panel as they may get lost among other conversations. In order to receive credit for today's presentation, you must respond to 90% of the attendance checks and keep the webinar tab in focus. If you switch to another tab in your browser, the system marks you as non-attentive, and it may affect your ability to meet the attendance requirements. Certificates are generated automatically and will be emailed shortly after the completion of the webinar. And we are working with the Flow team to update the certificate template with the appropriate information. We may need to send manual certificates for today's presentation only. A survey will display in your browser at the end of today's webinar. Please take a few moments to answer the questions and provide any feedback. The recordings of today's presentation will be available on our YouTube channel, and the link will be included in a follow-up email. So thank you for your attention, and without further delay, I will
A little bit about us as a firm, if you're not familiar, and just quickly before I do that, today's topic is preparing for the incurred cost proposal. Really quickly about us, if you've not been on one of our webinars before, we're a boutique accounting firm. We specialize in accounting system design, implementation, and audit support. We work only with government contractors. We live, eat, and breathe the FAR and the cost accounting standards. We do a lot of work with indirect rates, incurred cost proposals, and the various audits to support those. Our learning objectives for our 1 hour today: at the end of today's presentation, you should be able to list documents that are necessary for the preparation of the incurred cost proposal, identify common issues in gathering documents, and describe best practices for future success. I wanted to set the stage for today's presentation, and particularly why we're covering this topic today here on January 11th. So a little bit of background. Today's presentation is not on the preparation of the incurred cost proposal itself. So we're not going to dive into the schedules and the Excel stuff. If you want to see that, we've got 3 prior webinars that have been recorded. They are available on our YouTube channel. Should be able to download the PDF. We're going to have content information available to you as well later. We can have this in the follow-up email. But again, if you're looking for the actual schedules and the Excel stuff, look at one of the prior presentations on our YouTube channel. And then why are we talking about this topic today in January? Some of you might be saying, hey, the incurred cost proposal and again, for everybody, it's due 6 months after the close of the fiscal year. Many or probably most small businesses are calendar year companies. So you just closed out 2021 and you might say, Robert, June 30th is, almost 6 months away. Why am I talking about or worrying about the incurred cost proposal now? Well, there's a couple of reasons. First and foremost, you're closing out the year. You're already working on a lot of the same information and documents that you're going to need for the incurred cost proposal, right? You're cleaning up the general ledger. You're doing journal entries. You might be reconciling and reviewing job cost reports. You might be doing final invoices on contracts. There's a lot of things that are happening as part of your year-end process that really flow into doing the incurred cost proposal. So that's part of what we're going to talk about today. And then the other really big reason that I like to talk about it now is don't wait until May or June to think about it or to start the process. I don't want to say don't call us in May or June because we get plenty of those phone calls. But what I will tell you is May and June are very busy for us. They're very busy for other practitioners in preparing the incurred cost proposal. It's just like filing your taxes. If you call your accountant, on April 13th, 2 days before the deadline and say, hey, I finally got all my stuff together. Can we file my taxes? 9 times out of 10, they're going to say, yeah, we're going to file an extension and we'll file your taxes later, right? Because you waited so long to get here. We don't want to have that conversation. We don't want you calling us up on June 15th, because that's kind of going to be our conversation. We're going to say, hey, you're going to need to file an extension because we're not going to be able to get this done by the deadline. So the sooner you close out the stuff, get copies of these documents, save them off, contact us, contact another provider. It's going to make the process a lot smoother for you and your provider at the same time. All right, let's dive in and talk about, again, the kind of reports, what we're looking for, what you need, and what the issues are that you're going to encounter. So general ledger items, the basic reports that you're going to need to gather and save a copy of. Again, the key here at this time of the year is make sure that you do this after any adjusting entries. So you may have adjustments in the general ledger due to various reconciliations, whether it's fixed assets and depreciation, prepaid expenses. There are a lot of year-end reconciliations that occur. Make sure that all your accrual entries are in it. So for things like salaries payable, PTO, other types of accruals that may go in. And then make sure that that you do this after your tax advisor has reviewed everything, right? Because again, there can be adjustments from a tax perspective that would affect journal entries that need to be made, as well as any audits or reviews. So if you're an organization that goes through an external review or audit, again, I would tell you to wait until that process is complete, or at least until the auditors say, hey, we're working on the final report, but all the journal entries are done, right? So that's okay. We just want to know that everything is in the books, because if we start preparing the incurred cost proposal and you later come back and make, journal entries, adjustments of some sort, then that means, rework on our part to go back and make those updates. But the documents that you'll need are the trial balance, the income statement, and the balance sheet. The trial balance, what I would tell you is if we can get that in an Excel format, that makes life a whole lot easier. So no matter what system you're working in, get that trial balance out in Excel or a CSV file. Makes it a lot easier for us, or anybody really for that matter, to be able to manipulate the numbers and also, to import it into another tool. So what are we looking for? I just told you the documents. What are we looking for? Again, the trial balance is used to populate the schedules and calculate the indirect rates. That's one of the first steps that we do in preparing the incurred cost proposal. We're also looking for GAAP compliance, right? We want to make sure that, again, accruals, prepaid expenses, all of those types of things are in there correctly. We want to make sure that the books are reported on an accrual basis and not a cash basis. That's very, very important for government contract work and for the incurred cost proposal. Those reports have to be on an accrual basis, not a cash basis. If you don't know what that is, or you don't know what the differences are, contact us. I will tell you, we're putting together another webinar. We've got 6 scheduled already for this year. This is number 1. And I'm going to do a special one on cash versus accrual-based accounting for government contractors, but that's going to be like in the July, August timeframe. So just be watching out for that. Other things that we're looking for are whether items have been expensed or capitalized and that the related depreciation is correct. So 2 things that are really tied into that one bullet point. We want to make sure that, in a perfect example, we're cleaning this up for a client right now. They purchased a bunch of laptops together, and so the total value of those laptops exceeded their capitalization policy, so they capitalized it. But we said, hey, wait a minute, that's not correct, because those laptops are used individually, right? So we give those out to different people, different departments. The laptops are not, they don't have to be connected or working together in order to use them, right? Each individual laptop stands alone. And the cost, right, of the purchase price of the individual laptop was less than the capitalization threshold, so they should have been expensed. So even though the total dollar value of the purchase was $20,000, each individual laptop was about $1,500, $1,800. They should have been expensed. So that's something that has to be corrected. The other thing that's important to know, and this ties back to the cash versus a little bit of the cash basis of accounting. But one of the things that we often encounter is that people will record tax depreciation in the books instead of recording book depreciation, and they are different. Tax depreciation is accelerated, book depreciation is straight line. We need to make sure that depreciation recorded in the books for GAAP compliance is recorded at straight line depreciation, not the accelerated tax. So if you've been recording tax depreciation, that's another adjustment or correction that needs to be made. One of the other things we're looking for is to make sure that all W-2 labor accounts are clearly identified. It's a big issue in getting Schedule L correct, getting the fringe calculation correct. All of that is based on W-2 labor, and it specifically excludes things like temporary labor and subcontractor labor. So if you have, temporary labor, 1099 people, subcontractors, make sure those accounts and dollars are segregated and clearly identifiable in the general ledger. So what do we find? I just told you what we were looking for. What do we find? We find this mismatch of revenue and expenses, meaning that people are, we're not following the matching principle and aligning the cost of goods sold with the revenue. Again, sometimes that happens because of a cash basis in accounting versus accrual basis. Some of that occurs because of just not understanding the matching principle. And really quick example, if you're building a product and maybe that product, maybe it takes you, 2 or 3 months to build the product. So you're incurring expenses in months 1 and months 2, and some additional expenses in months 3, but then you deliver the product in month 3. Now, all of a sudden, what we see, and again, we come across this, is we look at, the monthly income statement, we see loss, huge revenue, loss, huge profit kind of thing. And that happens because there's this, again, mismatching of revenue and expenses. That's something that needs to be fixed. I already mentioned the book depreciation versus tax depreciation. And unfortunately, too often we find commingled labor accounts, right? Sometimes people say, well, it's all direct labor, whether it's subcontractor or 1099 or a W-2. And so they put it all into one labor account in the general ledger. And again, we need to make sure that that's segregated, because if it's not segregated, then we're not going to get a proper calculation for fringe, and we're going to have issues reconciling Schedule L. Moving on, job cost ledger. Right. So what are we looking for here? We're looking for, and it's going to come in a couple of different formats. It depends on the software that you use and the way that it spits it out. But we need some kind of summary job cost ledger. I'll tell you that the ideal report would be a CSV, or what we call a flat file in Excel, that lists the contract. It lists the cost elements, such as, is it labor, is it direct labor, material, travel, ODC, subcontractors, and list the amount so that I can be able to summarize. So this is what we're looking for here is we need to take the summary, the sum of all the parts, right? So I'm looking at all my jobs right now. I need to be able to take the sum of cost elements by job, roll them up, and they should tie back to my cost of goods sold section on my trial balance or on my income statement. So the job cost ledger, okay, the sum of those parts needs to equal the whole that's reported in the general ledger. Now, whether that comes out as a single Excel file, whether it comes out as individual job status reports, some way to get that data out of your system. Now, the individual job status reports, I would say, are not ideal. But if you only have a handful of projects, or maybe even 15 or 20 projects, it's not a big deal to key in that kind of data. But obviously, the more individual contracts you have, and if you're printing out a one-page report for each contract, then that means a lot of keying of data to get that kind of stuff into the incurred cost proposal. So try to get it in Excel. That's going to make everybody's life a little bit easier. I already said this. What are we looking for? The sum of the cost elements by job or by contract. The sum of the parts need to equal the whole, or again, the whole here is the general ledger listing of direct cost or cost of goods sold. What do we find? So here are the issues that we typically uncover. We prepare a number of incurred cost proposals each year. We help clients review if they do an internal preparation. We help them review it before they submit it. And these are the types of things that we uncover. Manual journal entries in the general ledger that are not reflected in the job cost ledger. So let me say this a different way and give you a couple of examples. So a similar situation is, hopefully most of you know, we should never make a manual journal entry into accounts receivable or into accounts payable. Why? Because if you do that, if you make a journal entry into accounts payable or accounts receivable, you're affecting the balance that's reflected on the balance sheet, but you're not affecting the underlying documents that support it, right? So the correct way to address an issue with an accounts receivable or an accounts payable is to actually correct the underlying invoice or vendor bill, right? Those are the two ways to do that. Because then if you correct the underlying document, then that underlying ledger is correct, which then flows up to the general ledger amount, and that's going to be correct. And so now that's going to line up. So how does that relate to this job cost issue? Well, it's a similar kind of thing. It's just that unfortunately, most systems don't really see job costing as a sub-ledger in the same way that it sees the accounts payable or accounts receivable as a sub-ledger. We treat it as a sub-ledger. And so we say for your cost of goods sold or your direct costs, whatever you call that section, don't make manual journal entries in there, right? The way costs should show up in there are through labor distribution, right? Timesheets, and goes through labor distribution and the dollars are posted. Or we've got expense reports or purchase orders, something like that that's coming through. So again, if there's a problem, if you're looking at something on a job or in your cost of goods sold as a whole, and you see that there's an issue, you shouldn't just make a journal entry in the general ledger. You should go back and either fix the timesheet, fix the labor distribution, whether it's an expense report, a purchase order, whatever that underlying document is that's driving the data there, that's the correct way to do it, because that's going to help make sure then that when that underlying posting is corrected and that underlying posting has, a tag or whatever your system calls it to associate it with the job, then when you've fixed the underlying thing, you've associated it to the job cost ledger and you've associated it to the general ledger at the top level. So now you have fixed both items, okay? So that's going to be critical there. Again, the other thing that we sometimes see is that people are posting, and maybe they're even doing the correct time reporting, expense reporting, or purchase orders, but somebody is forgetting to attach a job to it. Now, some of your accounting software, you can set it up to say, hey, every time this type of transaction occurs, or every time this account is used, so you might go in and say, hey, anytime there's a direct cost account that's used in a transaction, force me to enter a job. Some of your accounting software will allow you to do that. Unfortunately, QuickBooks won't force you to do it. You can associate a job, right? You can choose a customer and a job, but you can't tell QuickBooks to enforce that requirement. So one of the things that you can do there is on a regular basis is run a report and say, are there any transactions in a direct cost account that don't have a job, right? Because that would be a nice monthly reconciliation so that you can avoid getting to the end of the year and potentially having issues with the incurred cost proposal. The next set of things that we're looking for from a document perspective, we want to see the indirect rate reports that you're generating internally. Now, some of you maybe, again, maybe you're using software that's designed for government contractors. Maybe you're using a Uninet, Simpac, Procast, GovCon 365. There's some other tools out there, Deltek maybe. If you're using one of those tools, you should or probably already have an indirect rate report in there. Hopefully you're monitoring and monitoring that monthly and managing those rates. Again, that's another topic that we have coming up, I believe in June of this year that we're doing a webinar on. But hopefully you're looking at that each month. Provide a copy of that, whether you're going to prepare the incurred cost proposal internally, if you're going to use an external resource, give them a copy of it. So what are we looking for when you give that to us? There's a couple of things. One, especially if you're a new client to us, it helps us to make sure that we understand what your indirect rate structure is, right? So that report hopefully is a detailed report that shows the composition of the pool, meaning that it's listing each of the general ledger accounts that are feeding into the pool. The same thing for the base, that it's showing each of the general ledger accounts that are going into the base. If you've got other information that's feeding into that we can see that, and we can recreate that in your incurred cost proposal, right? Because that is, assuming that is your correct structure, then we want to make sure we're building the exact same structure in the incurred cost proposal. Now, what I will say is that sometimes clients will provide us reports, and in reviewing it, we say, hey, there's an issue with your report, right? Unfortunately, your report is wrong. And again, there can be different reasons for that. Sometimes it's the wrong allocation method. Maybe there's a mathematical error or whatever it is. When we can see that report, then we can, again, validate that we're using the same structure, but we can also validate that your report is correct. The third way that we use it is we validate the rates. So if we look at it and say, hey, this structure makes sense. The math is correct. We don't see any issues in the report. If this is the rate that your system is calculating, then when we plug all of that data into the incurred cost proposal, we should get the same rate, right? So it's a nice check and balance tool for you and for us. So what are the issues that we find? Sometimes we find missing accounts. One of the things you need to be aware of, and this is going to vary from system to system, it's also going to vary depending on how the report is written, but throughout the year, right, we oftentimes add new general ledger accounts for different reasons, right? There's a new type of expense, or we decide we want to break something out differently than it was broken out in the past. Maybe we've got a new operating division or something. Again, we've got some reason that said, hey, we've created some new general ledger accounts. One of the things you need to make sure is that all of your reports are updated to reflect those general ledger accounts. Now, some systems, again, like QuickBooks, what's nice is if you add an account, it shows up on the reports. It's just going to be there. That's really nice and helpful. That's helpful for those core reports inside of QuickBooks. If you're using the ICAT add-on, or if you're doing indirect rate reports in Excel, then obviously you might need to go in, right? In ICAT, and we can talk about that separately. If you make a change, for example, let's say to labor accounts, maybe you decide you want to take overhead labor and break out overhead labor into training labor and some other stuff because you want to track that for internal management purposes, you need to make sure that you update those accounts in the ICAT tool. Again, similarly, if you're using like Excel, you want to make sure that if you're using an external report, if somebody changed an account in the general ledger, then those accounts are going to need to be updated in Excel. If you're using another type of accounting software, it's going to vary a little bit, again, with the software and the reporting tool that they have. Sometimes when you build those reports, somebody has to go in and say, use this account and this account and this account and this account, right? They have to individually select each account to show up on the report. If that's the case and you've added an account, then somebody needs to go add that account to the report. If that report is set up to use a range, so it says, hey, for this report, always grab, the 6,000 to 6,099 because that's all of my fringe stuff. And if you add a new fringe account, then a range that's used in a report would automatically pick that up. What I want to drive home here, what I hope you're getting is make sure that whoever's is responsible for either entering or approving new GL accounts, that you have a communication to any kind of report writers to make sure that they're validating that any associated reports are also updated. Other issues, again, that we find with indirect rate reports when they're provided to us is we find incorrect allocation bases. We find sometimes that people are splitting allocation. For example, a couple of years ago, I had a client who came to me and they said, hey, we were working on their indirect rate stuff. And they said, and I was like, what is this? It doesn't make any sense. And they said, oh, well, part of our overhead we assign this way, and part of our overhead we assign that way. And I'm like, no, time out. It doesn't work that way. You have one overhead pool. So you have one overhead allocation method. You can't say, well, some of the overhead expenses we're going to do this way and some of the overhead expenses we're going to do a different way. It doesn't work like that. Now, maybe you need, maybe you need an intermediate pool for facilities. Maybe you need a separate overhead pool. But if you only have one overhead pool, you have one way to allocate it. So just make sure that those proper allocation methods are in place. Labor is the next big topic here. This is always one, it's kind of interesting doing the incurred cost proposals. There are some aspects that I think are easier than others. The labor in itself is it's not like rocket science difficult. The problem is, one, it's the number one expense of most businesses. It's one of the things that the government looks at. There are several aspects of labor that are in the incurred cost proposal, and we just find a number of issues and errors, and I'll go through those in a moment. The primary documents that you're going to need, 941s, your 940. So the 941s are your quarterly for FICA, right? So for Medicare and Social Security. Your 940 is your annual report for FUTA or federal unemployment. And then we like to get a copy of the year-end payroll summary from your payroll provider, right? And the reason for that last report is it helps us with reconciliations. Very, very rarely, we've got a couple of small clients who are just super meticulous in their reporting and their record keeping. They are unfortunately the very few that we have labor issues with. I would say most clients, when we're working either on indirect rates generically or specifically within the incurred cost proposal, we find various variances and issues with labor. And that year-end payroll summary, so what we're looking for there, right, it's the list of employees, the year-to-date total. It's going to have year-to-date taxes from the employer perspective. It's going to have all the gross earnings, bonuses, all of that type of stuff on there. That can be very helpful for us if we are seeing a discrepancy between the general ledger and the 941s and the 940. That year-end payroll summary can help, find those issues. So what are we looking for? The primary thing with Schedule L in the incurred cost proposal is that the general ledger labor, right? So the amount of labor that you're reporting and claiming as a cost has to equal the payroll summary, has to equal the 941 and the pre-tax deductions. So I don't want to dive too deep here, but the 941, the way it's presented, the total dollars there are net of any pre-tax deductions. Again, that's where that payroll summary report can help us validate, hey, here's gross payroll, here were the pre-tax deductions, this is the amount that's reported on the 941, and we can trace all of those numbers back. We often find, so we're looking to make sure that the labor report, as I said here, the general ledger ties to the wages on the 941. The other thing that the payroll summary report helps us with is we can validate that the employer taxes, right, the employer portion of taxes that you're claiming as part of the fringe pool also tied to the payroll summary report, right? All of that information should be in there. I do see some questions coming in, which is great. please keep your questions coming. We'll have some time at the end. We'll try to go through, try to get through as many as I can. And again, for your questions about the content, please put those in the Q&A or the question panel, not in the chat, because unfortunately they might get lost in some of the chat conversations. All right, back to our content here. What do we find with labor? Variances, lots and lots of variances. We find commingled labor accounts. Again, what I said earlier in terms of making sure that your W-2 labor is broken out and clearly identified. I mean, I've seen some clients who put W-2 in the GL description. That's helpful. Or at least being clear, this is, subcontractor labor. This is independent contractor labor, right? If you've got, if you've got 1099 people, if you've got temporary labor, like you're going to, a Robert Half or a Kelly Services or, some of those other providers out there where you're getting temporary labor, make sure that that GL account says temporary labor, right? It's very helpful in doing this labor reconciliation. The next one is a big one. We find payroll corrections are not updated in the general ledger, right? So what happens? What we often find, and sometimes we find it throughout the year when we're helping clients with various payroll things, somebody preparing payroll, they get all the reports, right? Timesheets have been approved. They get some reports out. They go in. They actually are doing the payroll process, and they go, oh, there's an error. Somebody forgot to enter sick leave, or somebody forgot to enter their holiday for this day, or any number of things, right? Things like that happen, and they go, oh, I'll just go ahead and fix it now in payroll, right? So that the person gets paid and they get the hours that they've earned or that are due to them, and they forget to go back and fix the timesheets. They forget to fix the labor distribution. Okay, so remember where I said, hey, fix the underlying documents in any kind of process. I don't care whether it's accounts payable, accounts receivable, timekeeping, purchase orders, any of those things. Go back and fix the underlying document. That's going to make sure, one, that you've got supporting documents, right? And you go through an audit, and then you can support any, whether it was the original, whether it was a correction, right? You've got the documents that are supported. But it also ensures that the dollar amounts flow through to the proper spots the way that they're supposed to. If you just correct something from a payroll perspective and you only correct it on the payroll side, then that's where we start finding those issues, right? We find those variances that cause problems. Related to that, sometimes we find bonuses or other types of pay might be added, again, at the payroll perspective. Somebody might be doing the quarterly payroll, the last payroll in the quarter, or maybe the last payroll in the year, and they go, oh, we got to make sure that we include the bonuses, right? So you get the bonus info, you enter it, again on the payroll side, so the employee is getting their bonus payment, but we forget to, properly record that in timekeeping and labor distribution. So make sure that you're fixing those underlying things. The next big set of documents and information that we're looking for are invoice details, because this is going to be important for Schedule I. And so what we're looking for there is a summary of invoiced amounts, and we're looking for inception to date. So this is one of the things where sometimes it gets a little confusing in the incurred cost proposal. So the incurred cost proposal, we're looking at your fiscal year, which is typically the calendar year for most companies. Otherwise, it's some 12-week period or 12-month period, I should say. We have a couple of clients, that their fiscal year starts October 1st. We have one that starts July 1st and runs through June 30th. Whatever that is, the incurred cost proposal is for your fiscal year, okay? However, for Schedule I, which is what I call the ultimate reconciliation schedule of the incurred cost proposal, that's where we're looking at inception to date costs and inception to date invoiced amounts, right? So we're trying to see inception to date by contract, have you under or overbilled the government? So just make sure that when you're pulling the invoice stuff, we do need summary invoiced amounts for those, and it's inception to date. For Schedule K, for the invoice details for your T&M contracts, that's going to be for the fiscal year. and we do need hours and rates by labor category. So make sure, again, depending on the software that you're using, if you're using QuickBooks, you can set up service items for labor categories. You can assign those service items then to each employee based upon their labor category. You can create them by contract. Then when the timekeeping is reported, it's associated with that service item. You can put a price with that service item, and then you can run reports. And that's very, very helpful in completing the Schedule K, again, where we need those hours and billable rates by labor category, by contract for the fiscal year. One of the other pieces of information that we need is a public voucher number and associated details. We've got to enter some of that information on Schedule I. So, whatever your number is on that invoice from Wide Area Workflow, whatever that public voucher number is, or any other, if it's not Wide Area Workflow, if it's one of the other online tools that some of the agencies use, we do need that piece of information. I will pause here for a moment and just say we, some in 2020, but definitely in 2021, and I think it's going to continue into 2022, we've seen a lot of scrutiny, increased scrutiny on the incurred cost proposal and on some of these details that oftentimes went overlooked in the past. For example, this public voucher thing. We saw this year DCAA picking on things that we've never seen them question before. Now, a lot of that we know is due to the PPP loans and the forgiveness, which is a whole other conversation. We've got a prior webinar that's recorded, that's on our YouTube channel. We've got blog posts out there about it. And I don't have time to go deep into it here today, but that PPP loan and forgiveness raised issues for many contractors and the proper reporting of that information, the proper calculating of the indirect rates. And so DCAA has had a lot of scrutiny on that, but on the incurred cost proposal in general. And I expect that because I expect that to carry into 2022, because we have clients who got loans and or forgiveness in 2021, right? So that's going to be reported now when they submit their incurred cost proposal this year. So we know that, throughout this year, we're going to continue to see that scrutiny. Carrying on with our content here, what we find as far as issues with the invoice details, we find missing public voucher information, and the T&M stuff is oftentimes, I got to be honest, it's just a hot mess. We've got a client right now that we've been working with and trying to get the hours and rates by labor category, by contract information out of their system has just been extremely difficult. Again, it's really going to be critical in this setup. If you're using, again, Uninet, Procast, Impact, one of those tools like that, they better handle labor categories and assigning those labor categories to the contract and providing reports for it. You can get there with QuickBooks Online and with desktop, again, by using the service items and by making sure that's synchronized to your timekeeping and that those service items are associated with the proper employees. If you need help with that, contact us. We can show you how to set that up. If you're using iCAD and you've got the proper setup in QuickBooks and you're collecting the data, then the iCAD tool will spit that information out in their reports. Another big piece, so obviously we've talked a lot about from the accounting side and from a numbers perspective of rates and dollars. But another big piece of the incurred cost proposal are contract details. We need contract briefs. Hopefully, you're preparing contract briefs as part of your normal, daily, monthly routine. When you get a new contract, when you get a modification, hopefully you're generating a brief for that, right? And there's a prescribed format. Some people put additional information in there, but there's a general prescribed format of the basic information that you should be capturing. I will tell you that one of the tools that we've created internally to do that is just an Excel spreadsheet. So it doesn't necessarily have to be, obviously the ICE format, and what I know a lot of people do is that, they create one tab in the Excel ICE format for each contract. And that tab, the way the DCA has laid it out in there is honestly kind of clunky and difficult. It's difficult from a data entry perspective. It also eats up a lot of space when you're creating a tab for each contract. So you can put all of that in a table format. So now you just have one table. That's what our template uses. We've got one table in there and a line for each contractor modification, and then columns for all of the fields and gathering the information. So that approach works, and again, makes it a little easier. If you're using, you might have a third-party tool. You might be using, again, one of the other software that's designed for government contractors, and it has the ability to generate those for you. Whatever that is, make it easy for you, make it easy for us. We do need to know, one of the things that you need to be capturing is that contract subject to the penalty clause? And that penalty clause will be clearly identified. That's important because we need to identify that in the incurred cost proposal. It's also important because if that penalty clause is in your contract and you claim unallowable costs and they get caught in an audit, then you're subject to those additional penalties. Okay, and those additional penalties can add up quickly. One of the other pieces that we need for the contract details is contract closing info, right? Did you actually complete the contract in the fiscal year? Because that needs to be noted in the incurred cost proposal. What do we find? Lots of missing information in general, right? So either companies are not preparing contract briefs, they're not keeping them updated, they don't have all the appropriate information. Again, if you pull the ICE document, if you get our template, which I'm going to talk about as well at the end of the presentation, if you look in there, you'll see what the prescribed format is for the contract briefs. Related to contract details, you also need the subcontract information. So very similar. You should be creating subcontract briefs. And what I'm talking about here are your subcontracts that you're issuing, not when you are a sub, because from the ICE perspective, I mean, there's a little bit of additional reporting and stuff, but otherwise from the ICE perspective, we don't care whether you're a prime or a sub. And there are a couple of tabs where we identify that stuff, but it doesn't really matter. Just the way that you are generating a contract brief for the contracts that you receive, you should be creating a contract brief for the subcontracts that you issue to another company. Because again, that data, so there's some key information on there that's necessary for the incurred cost proposal. And if you do this, if you make this part of the daily, weekly routine, if it's part of your checklist when you get an award or make an award, then it's a whole lot easier. Because unfortunately what happens is that sometimes we get to the incurred cost preparation, right? We're in the process of preparing it for clients, and we start uncovering this, and it's like, oh, now they got to go back and do several days, sometimes 2 or 3 weeks worth of work to uncover, right, and gather all of this information and bring it back. If you make it part of your daily, weekly process, put it on a checklist, then it's a whole lot easier when it, again, comes time for the incurred cost proposal. Why is this information important in January? I mean, we've talked about some of this already, right? That this stuff is, in addition to what I was saying, that you're working on it, it's fresh in your minds, right? That's probably, to me, an even more important reason. Not only are you working on a lot of those same tasks right now, you're closing out the books. What I tell people is create another folder, right? And we're all digital today, right? So create another folder on your network called Incurred Cost Proposal 2021. And, and when hey, we've finalized all the journal entries, here are the final financial statements, save a copy wherever you normally save them, save another copy in the incurred cost proposal file. When you're evaluating job cost reports, hopefully whether it's somebody in accounting or somebody in the program that's responsible for it, they're reviewing those and they're saying, hey, this job cost report looks correct for my job, for my contract. When all those are reviewed and reconciled, save a copy of those. When you're finalizing payroll taxes, right? Because remember what I said, 941s, the 940, the year-to-date payroll summary report. When you're finalizing those things in January, save a copy over there. And then What I'd like for you to do, hopefully you get that done. And I realize, some of those things do linger into February or March. But if you're a small enough company and you can knock out a lot of that stuff, I'd love for you to get on our calendar, call us February 1st and say, hey, Robert, we're ready to at least start the process. If we can at least start getting some of the documents, we can review what's there. We can tell you what's missing, what we're looking for. It's a whole lot easier to have that conversation in February or March than, calling us again June 15th and saying, hey, we're ready to start, because, that's when we're busy. And quite honestly, if you contact us much, and I'm not trying to put anybody off by any means, but if you start contacting us in June, there simply may not be enough time, especially if you've got several contracts, if you've got complexity in your incurred cost proposal. We simply may not have time to get everything done by June 30th, and then you're looking to file an extension. Not the end of the world, but we don't get like 6 month extensions. You're going to go and probably ask for a 30 to 60 day extension to file at most. So just be aware of that timing, and it gets away from us, right? Because, we spend, as accountants, we spend a lot of time in January doing the closeout. Then we've got other stuff and we get distracted and we think, it's easy to sit and think, oh, June 30th is, it's 5.5 months away. I'll deal with that later. And then all of a sudden, later is here and then we're in trouble. So what are some things looking forward, right? I told you like some best practices. We'd give you some tips and tricks. So this is the looking forward portion. Prevent journal entries to labor accounts. I really just cannot stress that enough. I've said it already, but if there's an issue with payroll, if there's an issue with a job cost, if there's an issue with timekeeping, fix the timesheets. Do a correcting timesheet. Flow the correcting timesheet through the labor distribution process so that all of those reports and stuff get to the right spots. If you do accruals, and there are valid reasons to do an accrual, create a separate account, right? So if you're going to accrue expenses, for example, at the end of the month, at the end of the quarter, at the end of the year, whatever your policy is for doing those accruals, if you're going to do that, create a separate account. So if you've got a direct labor account, have an accrued direct labor account as a separate account, so that all of your regular timesheets and labor distribution postings go to the direct labor account. But when you do the accrual, again, whether it's, hopefully you're doing them at the end of the month, but, at the end of the quarter, the end of the year, whenever you're doing those, then those accrual entries only go into that separate accrual account, and then it should zero out, right? Because that's the whole purpose of the accrual, is you're doing an in and out journal entry at the last day of the month and the first day of the next month, and then it should zero out, and it should be very easy to reconcile, right? And that would be, again, part of one of your monthly or your year-end process, is to make sure that, that account has otherwise been zeroed out, and if there's something in there, what that amount is and why it's there. And it's not an amount that's commingled, because that's the other problem, is if you've got all the regular labor distribution journal entries going in, and then you've got these accrual journal entries going in, then you start looking at the reports and it's just commingled, and it's very difficult to find where the error might be in that situation. I would tell you to use that same process for accruals if you're going to have accrued expenses, right? So we might have accrued expenses that we received, for example, the bill, the first week of January, but it was for stuff in December. And so we're going to go back and enter accrued stuff, or maybe we've got, some received, not invoiced items, right? That happens with receiving product inventory, that we didn't receive the invoice yet. So we do some accruals for that kind of stuff. Again, highly recommend if you create a separate accrual account and not flow those through your primary expense accounts. It just makes the reconciliation process cleaner and easier. Similarly, I already said this earlier, right? Prevent those journal entries to direct cost accounts. Make sure that if you've got hopefully a setting in your system that will allow you to go in and say, anytime a transaction uses a direct or a cost of goods sold account, require a project ID or job code or whatever your system calls it. Again, if you're using QuickBooks, nothing wrong with QuickBooks at all. We use it. A lot of clients use it. It's just, it lacks some functionality. What you can do in QuickBooks, though, is you can run reports, and we can show you how to set one up if you don't know how to do it, either online or desktop. You can run a report that says, hey, show me all of the transactions that don't have a job associated with them, right? And that's a good report, again, to run at the end of every month, because it's going to be fresher, it's going to be a shorter list. Fix those on a monthly basis. One, it's going to make sure that your job cost reporting is correct, right? So you know what your actual job costs are, but it's going to make the incurred cost proposal cleaner and easier at the end of the year. There's some system design things. If you're at the opportunity where maybe, hey, we can make some updates to our system design, maybe we're thinking about a new accounting software. There's some things that you can do with your chart of accounts. That's the foundation of any accounting system. If you've got a good organization of the general ledger and the cost pools, that makes indirect rate reporting and the incurred cost proposal easier. Make sure that you've got a good customer job set up. Again, with QuickBooks, there's, at least I'll say there's a right way, there's an easier way if you have the proper setup. So if you create a top level customer, and then you create a sub customer for the contract, for each contract. So let's say you've got 3 contracts with the Navy, US Navy might be your customer. Then you've got a sub customer for contract 1, contract 2, contract 3. And then under each of those contracts, you can have additional sub customers for CLINs, right? So then that way, now you've got reporting and invoicing by CLIN, by contract, by customer, okay? It's going to help you with your internal analysis, but it's also going to help you with the incurred cost proposal. Have some type of contract and subcontracting tool. Could be a good old-fashioned Access database, can be an Excel file. There's software out there that's designed for it. Some tool to capture that information, and again, capture it daily, weekly when you're making awards and receiving awards. It's a whole lot easier than trying to redo a year of that, in April or May when we're trying to work on the incurred cost proposal. If you're using QuickBooks Desktop, we highly, highly recommend iCat. Great tool, easy to use, very, very inexpensive. If you're not familiar with iCat, please contact us, support@leftbrainpro.com. You can go to our website and jump on our calendar. We'll have some of this information as well in our follow-up email, so you have direct links to stuff. But would love to do a quick 15-minute demo, show you how it works, show you how easy it works, and help you get set up in using a tool that's going to make your life and our life a whole lot better. We'll get to the Q&A here in a second. I did want to cover just a couple of things before we go into that Q&A session. So you can find us on social media. We've got a lot of information out there. Our website, we're constantly adding info. I would tell you to make sure that you check out our YouTube channel. We've got 33 videos out there right now. We're going to be adding video again from today and from all of the webinars. Will be out there. Again, our email address, the best way to contact us, support@leftbrainpro.com. If you haven't already, check out the other events that are listed on our website. We've already seen several registrations out through June. We've got a few more topics. We'll be doing one a month through the end of the year. So I've got a couple of more already to add to that, and we'll be having that in our email follow-up as well. And then the last thing that I want to do really quickly is just show you, we have, give me 1 second to navigate here. And hopefully you guys can see, I don't know if it's working correctly. I'll make sure that the link is in our follow-up email, but we do have an incurred cost proposal template that is free to download. Just remember that it is a template, so there are times that you will need to make some adjustments to that for your particular purposes. If you need help with those kinds of adjustments, contact us and we can help you with that. All right, I'm going to go over to the Q&A. And Steve, I see that we do have, and I did activate, so Steve, you want to activate?
Yes, we do have a question for you here. Mario asked, what are the pre-tax deductions?
So pre-tax deductions are going to be usually anything from a cafeteria plan or a Section 125 plan. So if you have employees who are paying all or a portion of like health insurance, those types of things, if you're offering supplemental insurance like AFLAC or those types of things where the employee is paying all or a portion of that, usually you have that set up on a pre-tax basis. Again, you do need to have a formal Section 125 plan in place in order to really be able to do that. But as long as you have that, those are the types of pre-tax deductions. And again, one of the issues and with it is just that we see at times that people don't reconcile that between the year-end summary report, that year-to-date summary payroll summary report, and the 941, because the 941 does report that net of those pre-tax deductions. Any other questions out there?
For now, you must have done a really good job explaining, because that is the only question that I have seen.
All right. Well, as we tidy up here, I want to say thank you to everybody. A quick reminder, again, that we will get the recording on our YouTube channel. We'll get an follow-up email out to you by tomorrow that has links and additional information. The certificates are automated. Again, we are working with the Flow platform for them to update the format for us so that the certificate includes the appropriate information. If you get a certificate that looks a little more blank today and it doesn't have the normal stuff with the CPE credits, then we will work to get an updated certificate to you. And hopefully then by next month, they will have the template corrected for us. Unfortunately, they contacted me and said that they were having some they had some other issues on the platform and their developers were focused on that. So I'm hoping to get that corrected and out to you. Otherwise, again, if you've got any questions, send us a follow-up email, support@leftbrainpro.com. You can always go straight to our website at leftbrainpro.com. And if you click on the Contact Us in the menu, you can schedule a call with us directly at your convenience. Thanks again. Have a great day, and we will see you next month. Take care.